Welcome back, guys. Today we're going to analyze Fortinet, and over the past 5 years, they are up 244%, definitely outperformed the S&P 500. This is a cybersecurity business, which we know that market is growing, so let's take a look here. It is a pretty large company at 50 billion, and the price earnings ratio right now is 44, and they've got solid margins, so that seems really high. They better have some growth, which they should because they are in cybersecurity. Let's take a look at their financials here. And we can see the growth from 2017 to 2023 has been very, very strong, like almost 20% a year, actually higher than that, 25% a year in revenue growth. Super, super good there. But we can see that last quarter they only grew by 10%, which may indicate that growth is stalling here, although it may reaccelerate later. We're not quite sure on that, but it might be a good idea to be conservative with our revenue growth projections moving forward. In terms of operating income and gross profit, they their margins are really super good. They basically just sell the software, and then the all that money is basically straight profit. And operating income, well, they do a lot of selling, so they have to pay their work or their salespeople, and so that's why their operating income is so much lower than their gross profit. Although they'll probably be able to increase their margins moving forward just because with scale, uh, they can continue to pay about the same amount to their salesmen, but their profits will increase. In terms of, yeah, they've been doing share buybacks as well, so we'll take a look at that later. In terms of their balance sheet is amazing. They have negative 1.37 billion in net debt, so they have more cash than debt. In terms of cash flow, see what they're doing with their cash. Looks like they have bought back stock. They're not paying any dividends. So they bought back 2 billion in stock a couple years ago and then 1.5 billion last year. Let's take a look at their stats, their margins really quick. Their ROIC is really high. That's always a good sign to see. Their operating margin, well, their gross margin is really high at like 75%, and their net margin has been increasing from like 18%, 19, and then 21 last year, and 22 last quarter. Let's take a look at, yeah, this. So their share repurchase program, they repurchased 17 million shares at an average price of $53, and that was last quarter from like the beginning of the, well, actually, yeah, 3 months ended December 31st. So if we look back at the chart, where were they buying back stock? Well, last year they were buying back stock right in here from August 23rd to December 23rd, and the average price was like $53, which means that they bought back the bulk of their stock right in this dip, which is very good to see. They're buying back stock at opportune times, it seems like, and then they don't buy back stock if the price gets too high, which reduces volatility and helps with the valuation of the company. Uh, Looks like they're being smart with their capital. So that's a good sign. Let's take a look at some of their investor slides here. Yeah, the revenue by geography. This is always good to see. They've got 40% coming from the Americas, 40% coming from Europe, and then 20% coming from Asia Pacific. So that's a good split, pretty diversified there. Their revenue segment breakdown. Well, most of their money comes from secure networking, which is these Fortinet products. I'm not quite sure exactly how they work or what they do or if it's better than other products, so don't ask me about that. I'm not an expert in cybersecurity. I just take a look at numbers. And their SaaS products and security operations products. It looks like they do have quite a few different products here. I didn't know that cybersecurity was so complicated, but yeah, that's a lot of stuff. And this is what they expect the total addressable market to be. Well, they expect secure networking to grow by 8% a year. So actually not that high, and secure operations plus 13% and 19%. Um, so we might have to adjust down our revenue growth projection just because it looks like the addressable market looks like not growing by all that much, especially for their largest revenue segment. Yeah, they serve over 500,000 organizations worldwide and 76% of the Fortune 100 companies. So does seem like they serve a lot of large companies, which is good to see because they have the most money. And let's check another slide. Financial highlights. We've got this one, which is always good to see. 66% of their total revenue is recurring. So that's going to be very consistent revenue generator. And as we know, it translates straight into profit, basically. Yeah. Let's take a look at the analysts, what the analysts have to say. Well, 1.71 to 1.94, and then we got 5.8 billion going up to 6.5 billion. They're expecting a 9% increase for this year, and then into next year, a 13% increase. Looking at the stats here, let's check their short percentage. Their short percentage is around 2%, which is actually kind of high for a cybersecurity business. Probably people trading on valuation because the valuation is a bit steep. But yeah, 2% isn't horrible or anything like that. Let's take a look at the valuation. So we're looking at, I put the estimates here, EPS estimate, revenue estimate there, buybacks of 1.5 billion. That's what they did last year. Probably expect that moving forward. Net debt, negative 1.4 billion. Discount rate of 10% and exit multiple of 25 because I think that this business has a long runway for growth and I don't think they'll be declining anytime soon. So that's why they get an exit multiple of 25. Right now they're trading at 44. So they really have to grow a lot to justify their exit multiple now. Okay, let's take a look at the earnings model. I have their earnings growing by about 12% a year. And in the case that they are able to grow their earnings by 12%, then their fair share price is $58, just a little bit lower than their price now. And with the revenue margins model, well, they did, 20% profit margin last year, and they're expecting 14% or 13.5% moving into 2025. So that's what I put there. And then slightly declining in growth thereafter, down to 10%. It might grow at like 8% just because that's what they're thinking their addressable market is going to grow by. But the other segments of their business should be growing higher. So I think 10% is a likely scenario here. And the profit margins should be expanding because that's what they've done in the past, and that's what I would expect. I think their profit margins could expand up to 25%. They might even expand to greater than that. I think that this is a very reasonable assumption for Fortinet. And in this case, then their fair share price is $61 if you want a 10% return. So I'd say if you bought them today, you'd probably be expecting a 9% return. Nothing insane or anything like that, but their past performance has been pretty solid. And so definitely not a bad business. They've got recurring revenue. It's pretty safe for the most part. There are competitors coming into the space, so just be mindful of that. And yeah, currently I do have a small position in this, but not much. And yeah, it's an all right business. It's nothing like super special. But yeah, that's my thoughts on this. Let me know what you guys think in the comments, and I'll see you in the next video.